Did you know that with some smart planning, you can optimize your investing to keep more money in your pocket and less out of Uncle Sam's? That's the Tax Man. Stick around as we unravel the secrets of making the tax code work for you on your journey to financial freedom. But before we jump in, if you're serious about maximizing your wealth and getting insider tips that could turbocharge your retirement savings, hit that subscribe button, turn on notifications, and let's get into it. Here's the lowdown on tax advantage investing. Tax advantage investing is like having a VIP pass to an exclusive club where your money grows faster and works harder. It's all about using accounts like IRAs, 401ks, and annuities to reduce or to defer taxes that you've got to pay on your investments. There's two main perks to look for: tax deferral, where you pay taxes later, and tax exempt status, where some of the gains are free from tax altogether. First up on our tax saving tour is the 401k plan. This is an employer-sponsored plan, so you can't get one on your own. Usually when you're a new hire, your employer will let you know about their 401k plan. As of 2023, you can sock up to about $20,500 into a 401k, and if you're over 50 years old, you're allowed to catch up and exceed this limit. Even better, if your employer is generous, they might even match contributions. This could be a portion of your contributions or a one-to-one match, and that's free money, folks. Definitely take advantage of it. There's also a Roth 401k, which kind of flips the script. This is when you pay taxes up front, but then it's smooth sailing when it comes to withdrawal. The Roth is great for people that think taxes are just going to keep going up. So the difference is a 401k is tax deferred, it comes right out of your paycheck, and a Roth IRA is tax exempt because you've already paid taxes in the beginning. Now moving on to another classic choice, the traditional IRA. IRA just stands for individual retirement account. This is like a Swiss Army knife in a tax advantage toolkit. With an IRA, you don't need an employer to sponsor the plan. In fact, you can deduct your contributions now, meaning pre-tax dollars. Your investment earnings get to chill out, and they stay tax deferred until you're ready to retire. But there's a catch. There's a contribution limit to the amount that you could put in each year, and if you make too much money, the deductibility benefit might just phase out. So if you're really rich, the IRA might not be for you. Now, there's another flavor of IRA. It's the Roth IRA. And just like the Roth 401k, you pay taxes up front, and then it's smooth sailing to retirement. I repeat, there are no taxes on withdrawals in retirement. In fact, there's no mandatory withdrawals either, so this could be a game changer for estate planning. But again, there are caps on this. If you make too much money, we got to keep looking. Now let's talk about fixed and indexed annuities. For those who love the idea of a set it and forget it investment, let's zoom in onto a retirement vehicle that is often overlooked. That's annuities. And let's not just say any annuities, we're talking about fixed or index annuities, not the variable annuities that get a bad name. I'm sure you've heard someone complain about variable annuities. Those are the ones that could lose money and charge a lot of fees. Anyway, fixed and index annuities are consistent and they are protected, meaning there's no downside risk. Now, fixed annuities are a compounding powerhouse. You put in a lump sum, you make regular payments, and the insurance company says, well, we've got a deal for you. They guarantee a fixed interest rate on your cash or tie something to an index like the S&P 500, and then your earnings compound on autopilot, silently and continuously beefing up your earnings without you lifting a finger. Now, perhaps the biggest advantage over a 401k is the guarantee of principal in an annuity. Yep, your money is safe from the wild mood swings of the market. Unlike a 401k, which is a roller coaster ride, a fixed annuity promises the return of your principal, no matter what happens in the market. For those aiming to preserve their capital and experience some market returns, a fixed annuity might be for you. Also, annuities offer hands-free management. For you free spirits like myself who prefer working on their passion as opposed to rebalancing a portfolio, annuities are something to consider. The insurance company handles the nitty-gritty, freeing you from the headache of rebalancing your investments or fretting over which stock or mutual fund to stick into your 401k. It's retirement planning on cruise control. And finally, for my really rich squad out there are no maximums to an annuity. In fact, that's why you've probably heard your rich neighbor talking about them. They've probably outgrown an IRA, or they don't work for someone else, so a 401k doesn't exist for them. Entrepreneurs and budding really rich people, because the threshold to get an annuity isn't that high, should rejoice. So let's stack annuities against a 401k and see how they compare. Unlike 401ks and traditional IRAs, where you need to carefully manage your asset allocation and investment choices, fixed and index annuities provide a straightforward path. With a 401k, you are are the captain of your investment journey, which some people like. But with an annuity, you're more like a passenger on a luxury liner, sure of your destination and probably sitting back and playing shuffleboard and drinking margaritas. So where the Roth IRA offers some tax advantages, which is undoubtedly attractive if you don't earn your way out of the Roth IRA, annuities bring something else to the table, which is guaranteed income. This means that come retirement, you know exactly how much income you're going to make every month and year over year. No surprises. And you can't outlive this income. So it's different from a Roth where your investment choices really decide how much money you're going to have when you decide to retire. And to zoom in on indexed annuities, which bridge the gap between fixed annuities and the ugly dirty cousin called variable annuities, which I'm not even going to talk about in this video, they provide more upside by linking your returns to an index like the S&P 500 or the index of your choice while maintaining a safety net. We call that a floor, meaning you can earn up to 8 or 10%, but you can never earn less than 0. So in down months, you earn 0. And in up months, you'll earn interest tied to the returns of whatever index you chose on your policy. Might be the S&P 500, might be something else. That choice up to you. So while you won't see sky-high returns like a bull run in your 401k, you also won't take a nosedive if that bull turns into a bear. That means when prices go down. So with their potent combination of automatic compounding, principal protection, and hands-off management, fixed and index annuities deserve a closer look, especially in your tax advantage toolkit. As with any financial move, tailor your choices to your own risk tolerance, retirement timeline, and your lifestyle goals. And if you'd like to learn more about annuities, check out my annuity specialized firm at getrevised.com. Let's talk about mixing and matching your tax advantage strategies. So you got all these options. Now what? It's like being in a buffet and you want a little bit of everything. Perhaps a little smoked salmon. Now this is called tax diversification. It's like you're mixing your tax now with tax later investments to come out on top, no matter what the future tax rates are. The key is to tailor a blend to suit your specific situation and goals. That's your tax bracket and your retirement vision. So just because you have a 401k or a Roth IRA doesn't mean that you can't also own an annuity. That's why many investors choose to layer a few of these strategies together. That's a 401k with an annuity, or maybe an IRA with an annuity. This is the beauty of knowing a little bit about these strategies so you can build the thing that works best for you. And there you have it. That's a whirlwind tour of tax advantage investing. By leveraging these different accounts, you are setting yourself up for a lovely future. And you know me, it's all about playing the long game. Every investor's journey is unique, so consider your specific needs and make sure you talk to a pro when it's time to make those big decisions. Did you find these tips helpful? Are you already using any of these strategies? Let me know in the comments. I love hearing about how you're taking charge of your financial destiny. If you're hungry for more insider tips like this, be sure to like the video, subscribe to the channel, and share it with a friend. Cheers to your next chapter on your path to prosperity, and I will see you soon.